Guys, in this video, we're going over Chapter 9 problems P1 and P2, and these are our problems on tax credit. So there's only a few problems each. I'm going to go over them in this video, and then you can apply to your problems, which will have different numbers. And I do recommend clicking the link to review that section in the book as well for the problem, because tax problems do have all sorts of angles and ways that you can do them differently when you aren't following the answer. So that's totally normal. We'll jump in with this one. This one is about the Child Independent Care Credit. So Tim and Martha paid $6,400 in employment-related expenses for their 3 young children who live with them all in their household. Martha received $1,600 of dependent care assistance from her employer, which was properly excluded from gross income. That means they had a qualified perk, right? A fringe benefit, as it's called for taxes, or perks, as we typically call it. The couple had $39,600 of AGI earned equally, because remember, it matters how much they make. The credit is limited. The amount of expenses that can qualify for the credit is limited to earned income of one of the spouses or, single person. So we're going to click here for the AGI schedule. Basically, the credit percentage of your qualified expenses is based on a percentage amount, which is based on where your adjusted gross income amount is. So what amount of the Child Independent Care Tax Credit can they claim on Form 1040? So let's see how. The amount of employer-related expenses is limited to $6,000 for 2 children or more. Isn't that crazy? You get $3,000 per child, but only for the first 2. Now, this amount must be reduced by the benefit they already got. You can never double dip, right? They already got $1,600 of dependent care assistance, which means it was just paid by the employer, and it was excluded from their gross income. Now, if it had been included as W-2 income, then it would qualify for the credit. But it's excluded as W-2 income, which means you don't see it in box 1 on a W-2. You see it in one of the other boxes with a code. So we have to subtract the amount they already got a benefit from the amount of employment-related expenses that qualify for the credit. So that's 6,000 minus 1,600, which is 4,400. That's their allowable expenses for the credit. Since their AGI was over 39,000, we can check this here. So we got 39,000 right here in this second to last line. So we can see 22%. And is that what they said? 22% of their expenses. So 22% times how much of that, what do we times this 22% by? Our allowable expenses are 4,400. And they had 6,400 and qualified. So which number are we going to use? This 44 because it's less. If their actual expenses were less, we would use the actual expenses. So we'll take the 4,400 and we'll times it by 22%, and that's 968. So that's how much the credit was. Now in the second B, how would your answer differ if the couple had AGI of 37,500 that was earned entirely by Tim? So you remember what I just said about earned income. That's another level of limitation that didn't apply in A, but it's limited to earned income as well. So that's why they really want to make sure only people use this who need to use it, who are incurring the expense of childcare for working. Second one. This one we're talking about the elderly or disabled credit. And we're going to go through a bit of a calculation, and they're asking for just one piece for this situation, for the calculation. What is the AGI limit above which the following taxpayers, which we have A, B, C, would not be eligible to receive a credit for elderly or disabled? So in each case, we are trying to determine when the base amount goes to zero. The base amount is, this is a first base amount. We have $3,750 for married filing separate, $7,500 for joint, $5,000 for single or joint returns where only one spouse qualifies. The base amount must be reduced by the amount of non-taxable Social Security benefits and by 1/2 of the amount. So I think this is confusing. This is the second limit, which we'll call down here the lower limit because it's the second in the calculation. This sounds like they're saying reduce by this amount, but they're actually meaning add that amount. So I did this out in steps. So determine the first base amount. That was the first base based on AGI that I just went over. This is the second. We'll then subtract the non-taxable Social Security benefits for each situation here. The result times 50%, right here, the amount times 2, plus the second AGI limit. So we'll do out the first one, which is single. So you can see a single taxpayer eligible for the credit who receives $1,100 in non-taxable Social Security benefits. So we're going to do the first one, and then you'll do the second too on your own, because the only difference is choosing a different, the only difference is the different amounts of non-taxable Social Security and the filing status and choosing a different limit. So for single, what is our first base amount? $3,750 married filing separate, $7,500 joint returns, $5,000 single returns, or joint with only one spouse qualifying. So the point is $5,000, right? That's our base. Now we're going to subtract the non-taxable Social Security benefits. So $1,100 of non-taxable Social Security benefits. Those are the two things they're giving us in each problem, right? The amount of non-taxable Social Security benefits and the filing status. So we subtract these two, and this equals 4,000. And now we're going to multiply that by 2. 8,000, and now we're going to add it to the lower limit in this calculation because it's lowered down. So we're looking for the single amount, which is AGI exceeds 75 for single. So we're going to do 75. $7,500, and so our answer, and I'll make this match the one above. We'll do add. And so this is 15,500. Now let's see if we're right. For this example, when 15,300. So let's see what I did wrong. I probably didn't add right since I'm talking out loud. So I did 1,000 of non-taxable Social Security benefits instead of 1,100. So we'll fix that. 1,100, which would mean 39. I just can't do math while I'm talking on the video. And then we'll multiply that times 2. So that's 6,000 plus 18, 7,800. And then we'll add our 7,500, 14, 15,300. There we go. Now I matched the answer here, 15,300. So for this one, I'm going to let you do the next two. You can also pause this. You can see the solutions right there. I'll let you do the next two on your own. Remember, the only things that change I would just write this out and follow this, what I just did right here on a piece of paper with the new amount. So the only two things that are changing, the amount of Social Security benefits and the base amount based on filing status, and the second base amount based on filing status. And that's the amount at which they would no longer be eligible for the credit. So once their AGI exceeds that amount, they no longer would get a credit because we're able to back into that amount for basically any credit usually. Okay, now we're on to a good one that we should all know, education credits. We're looking at the American Opportunity Tax Credit, AOTC, as it's called in the tax community, or the Lifetime Learning Credit. Now, AOTC is always higher, far more valuable, but AOTC only qualifies for the first 4 years of college. Lifetime learning, as it sounds, can be taken anytime. So we're going to calculate which one they would take in each situation. A single individual with modified AGI of 32,900, expenses of 2,400 for a child who's a full-time college freshman. So we want to look at both the lifetime learning and the AOTC. So if we look at the lifetime learning first, it's very straightforward. 20% of the expenses up to I don't have the book in front of me, but you can click on the link to see the maximum amount that you can take it up to. So that would only be a $480 credit. So let's check the AOTC. 100% of the first $2,000. So that would be $2,000. So we're already way over. And then 25% of the remaining $2,000, which $400 of expenses times 25% would be $100, so $2,100. So of course, they're going to take the AOTC and the amount would be $2,100. Now again, we have $44,500 for modified AGI of a single individual with expenses of $3,000 for a child who's a full-time college junior. Now you can click on the link when you're viewing this problem. You'll see the links to the textbook to see the capped amounts, so the AGI amounts when the phase out begins for the credits. There's different phase outs for all of the credits. So be sure to check out those phase out amounts and consider that. So in this one, it won't apply. AOTC, again, 100% of the first, 25% of the remaining. In this case, it's 1,000, so the credit's a little bigger, 250. But the lifetime learning credit, 3,000 times 20%, 600. AGI limitations don't apply, so obviously we're going to stick with the AOTC again. It's much more. Now, a couple married filing joint with modified AGI of 79,300 and expenses of 6,000 for a child who is a full-time graduate student. So why are we going to take the lifetime learning? Because they're beyond the first 4 years of school. 6,000 times 20%, right? 1,200. Okay, and the last one here is calculating the tax credit. Walt and Dolores have 2 dependent children, Bill and Tiffany. Bill is a freshman at State University, and Tiffany is working on her graduate degree. Couple has qualified expenses of $3,300 for Bill, who is a half-time student, and $8,000 for Tiffany. What are the amounts and types of education credits that Walt and Dolores can take, assuming they have no modified AGI limitation? So we don't even have to apply it. We're just going to assume it. So American Opportunity Credit is available for students in their first 4 years who are attending at least half-time. Therefore, Bill qualifies, and he would be 100% of the first 2,000, 25% of the remainder of 13, which equals this amount. Tiffany is not eligible since she has passed her first 4 years. She's working on a graduate degree. So the lifetime learning credit is 20% of up to 10,000 qualified expenses. There it is. And that's for post-secondary level. I think the limitation is higher for Post-secondary. Oh no, 10,000. I think they've lowered it over the years. I think it used to be 20. Thus, Tiffany's expenses are, it's different every year. So all of this stuff you have to check every year. You can never assume that it would be the same. Usually there's some changes. Tiffany's expenses are eligible for a lifetime learning credit of $1,600, 20% times the total amount, which was 8,000. 8,000 times 2016. Although Bill qualifies for the lifetime learning credit, AOTC is going to be higher. Both credits can be taken for the same expenses. So there's a total of their expenses. Okay, moving on. Again, you'll have different numbers, so be sure to follow along as needed. Chapter 9, Problems P2, Foreign Tax Credit. I wanted you to get to see a bunch of different credits. Jenna paid for an income tax of $2,015 on foreign income of $10,076. Her worldwide taxable income, $99,800, and her U.S. taxable liability was $25,000. So presumably she earned $99,800 total and paid $25,000 in U.S. taxes. She earned of this amount, $10,076 was earned internationally. Maybe she was working in Germany, right? And so she paid German taxes of $2,015. So what is the amount of the foreign tax credit allowed? So we've got to look at a few things here because the amount of the foreign tax credit is limited to the lesser of foreign taxes paid, or this little calculation right here, foreign sourced taxable income, this amount, divided by worldwide taxable income, this amount, times U.S. tax liability. So I want to look at the portion of your foreign income to your total income and the percentage of U.S. taxes that you paid. So in this case, the limitation calculation is 10,000 divided by 99,800 times the U.S. taxes equals 2,524. And so which amount is less, the actual foreign taxes paid or the amount calculated here? The actual foreign taxes paid, and so that's here. The foreign tax credit allowed in the second scenario, what would be allowed if Jenna had paid more? If she had paid more, then the lesser would have actually been the limitation amount, right? And we'll put that there. Okay, next question. Child tax credit. So the child tax credit is $2,000 per child. They increased the limitations. So you can click the links to see the limitations. It's now 200,000 and 400,000. It's down here. And then for each $1,000 over the 200,000 or 400,000 AGI, it's reduced by $50 per thousand, and you always round up. So not standard rounding. It's if you're above $1,001, you round up, and it's another $50 reduction. So not very fair. But this was part of the most recent change, so fits right in. And it seems to have wanted to make up. They just all they did in changing this credit. It used to be actually more in total for lower incomes, and now they've just expanded it. They've just changed it quite a bit and really increased the AGI limitation amount. So single parent with modified AGI of 215, 400, and one child. So one child, $2,000 would be the credit, but they're over the limit by 15,400. So remember, for each $1,000, so it would be 15, but we're over 15, so it's going to be 16. So you can see that down here. Modified AGI exceeds the limitation by 15,400, rounded to 16 reductions of $50 each. So 16 times 50 is 800. 2,000 minus 800 is 1,200. Now, I think I just explained that pretty well. I'll let you do the next two on this one. And lastly here, Retirement savings contribution credit. Now you can use this table to determine the filing status, the amount of income, the row they're in, which determines the percentage of the credit, which is times by the amount they contributed to a retirement plan. So you can see here, married couple with modified AGI of $37,500 contributed $1,790 to an IRA. So we look over here, 37.5 joint, married filing joint. So they're right here, they're under here. So it's going to be 50% of the amount they contributed. They contributed 1,790 times 50%, and that's their retirement savings credit. I'll let you do the other ones on your own. On this one, keep in mind the credit is maxed at $2,000 of contributions. So the actual credit amount max is lower, right? Okay, guys, that's it for our tax credits. Comment questions in the forum. This is our last chapter. Great job. And I'll see you in our next assignment. Bye.